I've got three penny stocks that I'm looking at today. I've got Great Ajax, Bsquare and Autoscope. I have posted about every one of these on the website this morning. Great Ajax is a real estate investment trust. Bsquare is an Internet of Things company. I can't quite wrap my head around what that is yet, but I'm interested in these big gains that it's had. And Autoscope works with travel and technology together to do with infrastructure, cameras and sort of self-driving cars. All three of these look like they could give a really good return, especially Great Ajax, but we will go into that very shortly. It's the 27th of August. My name's Tyrone and you're watching Minipip. The first one I'm going to look at is Autoscope Technologies. It is a US based sort of tech company that do driverless technology for things like cameras, sensors, very niche things. It's a very niche market. And obviously you can see as a result with a cheap share price and a very cheap market cap. So the actual company itself has a market cap of just $40 million. And last year they did 13.1 million in revenue and a profit after tax of just $1 million. So it's a very small business from that aspect. But it has been around since the 80s. So, they've been around coming on almost 40 years now. Just looking at the chart, one of the reasons it's got my attention is we got this big spike in April where we saw this 44% gain followed by another 22%. A great gain there for anybody that would have been in it, which wasn't me. It's 160%. And it now looks like we've had that sort of cool down period throughout May to July, and we're building up this base, and we have been throughout July and into August, and to me it looks like we are getting prepared for that next leg higher, and I would be aiming for the upper band, which is this yellow sort of line here at $8.74, which is still a nice return of 14%, and then further upside towards $10, and then those highs of $11, which is a 51% return. That is what I'm looking at from the technical aspect. There's also a trend line underneath as well. So you've got the trend line there underneath, and until that sort of level here at sort of $6.79 breaks, $6.79, which is around here, till that breaks, I would be a buyer up until then. If we do break this level, we go towards the lower band, which is about $4.50 to $5. Again, I'm looking for $10 and $12 in extension of that. Looking at the numbers, they're really good. 13.1 million turnover with a $1 million profit. But what I'm more interested in is this year and what they're doing this year. So I worked out, and again, this is on our website as a post. So it looks like if they continue as they're going to do turnover of about 13.5 million with a profit after tax of somewhere in the region of about 3.7 million. And it's the profit after tax to me which is going to matter, because that is what's going to keep investors interested. More profit, more reinvestment, more dividends to potentially pay out if they choose to pay them, and that's what investors want to see. Revenue is about the same with a slight increase, but again, I'm more interested in the profit for this company. It's got a very cheap market cap, and there's a lot of potential. Balance sheet is exceptional. It's one of the best balance sheets I've seen in quite a long time as well. Good cash on hand of 8.4 million. I don't know, I got 4.6 from, so 8.4 million. Total assets are 21.6 million, and liabilities are just $998,000. So they've got 20.6 million net positive, which is gives them a liabilities to assets ratio of 4.6%. The average company on the stock market has around 50 to 60%. So this is absolutely brilliant in terms of how good this balance sheet is. The next company is Bsquare. Bsquare is in one of these industries that I don't quite get it, I'll be honest. It's Internet of Things. I've seen it popping up recently. I don't really get it. If anyone could understand it, then by all means message me and try and explain it to me. But it's a bit of an odd thing to me. What I'm interested in realistically here is the chart, because the financials aren't very good either. I'll have a look at them in a second. But it's these spikes here that I'm interested in. And given these here, this was around a 550% gain, and this one was around a 250% gain. What I would like to see is another spike at some point between now and potentially the end of the year, which is it's a 4 or 5 month gap as such. But to see, even if we saw it go up to $4 a share or even $5 a share at its current level, it's a potential 100% return, 150% return on your investment, which is really good. You're not going to get that in your big blue chips like Tesla, Apple, as such. And so that is what I'm interested in looking at for this one. I'm not trading this on numbers on the fundamental side of things. I'm trading it on just the technical side of things. My floor in this one would be as well sort of this region here, about $2 really. So again, your risk to reward is pretty much worth it. So if we just quickly look, if you was buying in now, you lose 20%, but potentially you could make towards maybe 100% to 150% if we get another spike. And to lose 20%, personally, my personal preference, it's not investment advice, that is worth it to me. The risk to reward is worth it, and I think that hopefully we do get another spike. Looking at the numbers just quickly, I'll quickly go over them. They are pretty poor numbers, unfortunately. So you've got revenue at somewhere in the region of about, let's have a look. So you've got 2020 revenue at, easy to do it on here. So market cap's 52.8 million, $47.1 million revenue in 2020, and a loss of 1.89 million, so just short of 2 million. Looking at this year, again, we've got, looking at the most recent quarters, if they continue as they're going to do, you're going to see $41.2 million turnover with $1 million loss. That's crap. You're seeing a loss, you're still seeing a loss, and the turnover's getting worse. Okay. Looking at the balance sheet, it's not really any better. 9.2 million cash, total assets 18.7, liabilities 9.86. So they do have net positive of 8.8 million. So they are in positive assets, but to me, it just doesn't really appeal from that financial aspect, unlike Autoscope did. Autoscope's numbers are absolutely brilliant. I love the balance sheet and I love the turnover of the business. They've got a better profit margin than these, and they've got a superb balance sheet. And another company that I'm going to look at in a second, Ajax, is even better in terms of the financials. But I'm only looking at the technical aspect, hoping to see a spike again towards this $6 level. And your floor in this would be about $2. If we get to $2, cut it off, you lose 20%, it is what it is. If it goes up, we make 100%, we make 150%, definitely worth it. Now, looking at the next one, Ajax. So Ajax fell very hard in the pandemic. It fell 75% from the highs to the lows, and since that we have gained quite a lot. So we've gained 250% since the lows, which is 240%. A bit further on its peak, 252. We're currently up 240. I think this is going to go a lot higher, and this is because they have got an absolutely brilliant balance sheet. So, and income statement. So looking at the income statement, if we look at the annual first, last year they did 63.6 million, but this is what I love. And there's not many companies in the markets that perform like this. I think one of the others is Auto Trader and Rightmove, Facebook as well. They're running on almost a 50% profit margin, $33.4 million profit on a $63 million revenue. That is absolutely brilliant to see. So as a result, you've got this superb, strong company that can redevelop into itself and reinvest in itself. Looking at this year, they are on track, I believe. I'll just get it up. So they're on track this year. I worked out that so turnover will be about 79.1 million with a profit after tax of 43.6 million. Both improvements over the board, very good improvements as well. $10 million extra in profit, and a sort of $15 million, $16 million increase in revenue. So essentially what they're turning over, they're running on like a 70% profit margin on the additional income that they're bringing in, which is brilliant to see. Costs are very little, basically. Looking at the balance sheet, this is a real estate investment trust, so it just deals with real estate. So it deals with income from rentals, it deals with mortgages, it deals with all that type of stuff. Cash on hand is 88.3 million. Total assets are $1 billion. Sorry, their current assets, apologies. So total assets all around are 1.67 billion, and total liabilities are 1.1 billion, leaving net positive 497 million. That has shrunk since the previous year, but again, since the previous quarter. But I'm not concerned because of those profitable figures. They are absolutely brilliant. Looking at the chart, this looks really good. We've got this trend line going here. By all means, it's going to be a slow mover. So unlike potentially Bsquare that could get you 200%, or Autoscope, which could do 30-40% in the next couple of months, Great Ajax, it's not quite a penny stock, but it's on the borderline in my opinion. You're $13 a share, $300 million market cap. That in some respect is penny stock territory. But looking at its current level, you aim to the highs, you're going to see a 15% return. That's probably going to take you maybe back to the back end of the year, maybe December. 20% is good, and then towards $20 potentially by Q1 of next year. So that's April 2022. That's a good return for anybody who is invested in a portfolio. Okay, so we're probably going to see a nice steady increase towards that $20 level, which is what I want to see. I do think that this is just going to continue. There is no reason for this not to continue. You've got a strong housing market, strong housing market, low interest rates, and even if they do increase, we've got Jackson Hole tonight. If there's tapering, if there's talks of interest rates increases, we might see that decline to maybe $12, $50 or $13, but that's only going to provide, in my opinion, another opportunity to buy more or get long if you're trading this. I do post about all of these companies on the website, and I post daily as well on the website. So some other companies, Global Lithium ETF, Codal and BsquAURE. Some other ones that I've been looking at, I look at index funds across the world. So we've got the Nifty 50, which is the Indian markets. I've looked at Walt Disney recently, which is underperforming in my opinion, has a lot of potential. And I also look at some currency pairs and odd commodities like orange juice, which again, orange juice, I posted this at 138. We're now at 141, I think we're even higher than that. Where do we sit? We sit at 147. We've seen this massive increase. Brilliant trade idea for anybody who is trading. These odd things they're worth doing, worth taking the risk. If you like this video, please like it, and if you're not subscribed, please subscribe. It helps the channel, helps us grow, and hopefully helps you guys make money. It's the 27th of August. My name's Tyrone. Thanks for watching.